All right. Good evening, good morning, good afternoon. Welcome to the Inner Circle Live Agent Session. I'm your host for tonight's session, Benny Allen, along with my awesome partner in crime, Mr. Ryan Carthage, who may be joining us here a little bit later, possibly. Super busy day for him today. But we are definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can get from this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we continue to do an amazing job of participating and engaging. If everybody can hear me loud and clear, drop me a 1 in the chat. Let me know you're all fired up, ready to close out the week and ready to go for tonight's session. All right, I see the ones coming through. Awesome. I appreciate it. So let's jump right in and take a look at the Forex calendar. And today we were looking at the CAD numbers, right? We were looking forward to that, and we could see that it came in. Unemployment change came in better than expected, 34.7. The rate, 5%. Forecast is 5.1. That was good. And we can see the unemployment claims creeped up a little bit. So a little bit of mixed data at 228, right, on a forecast of 200. One of the reports that came out today, right, Trading Economics, is we see that U.S. job cuts surge, right? So U.S.-based employers announced 88.9, right, K job cuts in March, 319% above the 21.387K a year earlier, as higher interest rates are forcing companies to cut costs, right? And so those of you that have been in the group for a while, we talk about the fundamentals back and forth. We talk about this being a possibility, right? Borrowing costs get too high, sentiment starts to sour, and you see the contraction starts to occur, right? So if the money's expensive, we don't expand, we don't invest to grow, we don't create as many jobs, right? And then we're looking overall to cut costs on the company, right? So it was the third time this year that cuts were higher than the corresponding month a year earlier. Considering Q1 employers announced 270,416 cuts, the highest first quarter total since 2020, led by the tech sector, right? We've talked about that before as well, right? So we see what happened with Silicon Valley Bank, right? Provided a lot of funding for a lot of tech startups, things like that. A lot of times tech is the first thing to get hit, right? When you look at the stock market and you look at the tech sector, oftentimes when you get that downturn, typically the first sector to get hit oftentimes, right? At least that's what I've experienced and since I've been trading, right? Watching this thing play out. So, hey, we know what comes with, right? Rising interest rates, especially at the fastest pace, right? We know that the Federal Reserve, right? They kept saying, hey, we're not seeing the pain yet, These hikes have a lasting, a lagging effect. And we're starting to see it all play out. So I hope for a lot of you that have been following along with this for a while, that you're starting to gain a little bit better of an understanding of how this all works, right? And so what we have to do is we have to continue to keep our investment hats on and say to ourselves, well, where's the opportunity, right? Whether it be in stocks, indices, we trade currently primarily in commodities. Where's the opportunity, right? So be ready. Be ready. If things start to decline, be ready, because as an investor, it represents an opportunity, right? That's how it goes. Okay. Any questions on the Canadian number, the numbers out of Canada? Anything with any questions around the U.S. job cut surge? That was big news today. But it's kind of not surprised by it though.
Oh,
No. Let's hop over. Let's take a look at the DXY, right? April 7th, nothing too much there going, because we know that tomorrow we have non-farm payroll, right? So kind of have a little bit of a pause, right? for the unemployment numbers. This is going to be big tomorrow because it's the last major piece of data that the Fed is going to see before their meeting in May. So that's at 8:30 tomorrow. So we will definitely be keeping an eye out for that. All right. Average hourly earnings month over month, non-farm employment change, and the unemployment rate. So we know this week we've seen some numbers tail off in multiple areas, right? In regards to the job openings for the United States. We saw the ISM manufacturing PMI come in under forecast, right? So we saw the ADP jobs numbers come through. It missed forecast here in the United States here. Okay, it came in at 145 on 208. And now we've got the non-farm payroll and unemployment numbers coming tomorrow. So should be interesting on a Good Friday. Right. So let's dive right in. Right? Take a look at it. Okay. We've kind of got the dollar, right? Still coming off of that right tip on the weekly. We look at the daily. We were talking about this last night where we found some support. But we were discussing it this morning. You know, yes, it got a bounce, right? You can see we're still trending to the downside. Why did we get that bounce? Sometimes it could be just because you've got, investors closing out some of their short positions ahead of a major report like non-farm payroll. Okay, so that can cause that movement in the market to the upside for the dollar. But we know, right? It moves in waves, right? It never just goes straight down. Okay, lower lows, lower highs on the way down, right? So that shouldn't surprise us, right? That we get a bounce, right, in a downward trending price action. Okay, sometimes it just helps to kind of try to figure out why it might be happening. So I think that might be what happened last night and first part of today. All right, so that's the dollar. Hey, it is what it is, right? Market moves in waves, economies move in cycles. All right, that's it. Any questions on the dollar?
No.
All right. So let's take a look at just posted one in the Discord for this Aussie Swiss. Right, we know that the Aussies have been bearish, right, to the downside. You can see here from our weekly chart that we're right at this 60.26 weekly level, right? So major level. Okay. Now it doesn't look like much here, right? We can see it though, where we had price tested once, came right back and is testing it again. So that's a double bottom that we'll see more clearly as we move down through the time frame. So overall bearish, but we may be in for a bit of a correction, and that's what we put in the Discord, right? The potential there, right? So you either plan that correction or you're waiting for a high price for a short continuation. Ultimately, right, if we continue bearish with this Aussie Swiss, that's our downside target there, 58.77 on the daily fib. But right now we're playing this game, right? We've got a clean double bottom there. If you come in on the 4, right, the opportunity is on both charts, 4 hour and the 1. You can see where that's a clean double bottom opportunity right there. So we've got to respect that, right? So now it's just being patient, okay? Looking for the opportunity to see a price. It's going to reverse off that support, okay? So you could do that. Hey, I'm in it right now, or, right, you could draw a trend line. Hey, if I get a break, get a higher high, get a correction, pull back, maybe break above 4 hour, the 60.49 level, right? And see if we can get the continuation to the upside on it, right? So here, this level, right, looking at close to 70 pips. If it pushes down to that 80-20 zone at 127 level, you're looking at 100 there. So, all right, so that's one to keep your eyes on as we close out the week. That will maybe take a little bit of time, but the opportunity is there, right? So when you spot that double bottom, right, you have to eyes wide open, right? When you see that type of scenario playing out. Okay. Again, if you're saying, hey, my trend is down, I'm bearish, then just wait for your high price and then get short. Any questions on the Aussie Swiss?
No.
Nope. All right. All right. And you guys, if you get a chance, in the Discord, let us know. You got questions, you can put it in the Discord. Let us know. If you're having some challenges, let us know how your trading's going. Right. That's why we started that. Because people wanted, some type of means to communicate as a group. So make sure you utilize that if you need help. Okay. I want to check in on some pairs. I want to take a look at that dollar CAD that we look. So just to review some of the things that we have our eyes on. All right. So here's this dollar CAD still trying to make that move, right? Still trying to make that swing, right? So we want to make sure we keep our eyes on that, especially ahead of the non-farm tomorrow. Okay, so we can see that we formed a low. So if we go up to the daily, you can see like what? So our first thought is potentially when we go back up to retest that 135 level. So this is now an official swing low, right? 2 to the left, 2 to the right, center candle low, right? So that's a support. Just like that. Same thing over and over and over again. So we've got a reaction to the upside. Okay, so we'll see if price wants to make its way back to retest 135.54, which you can see, right? It broke. You see how it wicked out there, tried to test it. Maybe we go back there. We shall see. All right. So if you look at the one, right, steady climb into the zone. Okay. And you can see that 135.54, right? Is right in between that 61.8 and that 786 level. Okay. So that's the UCAT. Anybody participating in that move to the upside? I know we talked about it last night. Like it's trying to play out. Bridget, yes. Awesome. Awesome. Hey, good job. Good job. Especially when you're new. Like you say, if you're in a demo or you're trading a small account, hey man, you miss 100% of the shots you don't take. Especially if you're in that demo account. Go ahead and give it a shot. Journal it. Like if you're brand new, make sure, right? And that's the perfect time to really kind of hone in that discipline. Take it from me, it's hard to go in reverse after you've moved so far along and to develop the right discipline, right? That's tough, but can it be done? Absolutely, right? So you just have to kind of deprogram and wipe your hard drive, right? And start all over again. But you want to make sure, right? If you can, hey, take that screenshot of what you're doing, see how it plays out, and if you're doing it in the demo in the beginning, that's even better, right? Because you're building good habits, big, strong habits, right? And once you start tracking things and analyzing the data, right, you can shorten your learning curve that way. So make sure you're doing that. So that's the UCAT. That's already at the 382 level on the one, but I think we got a ways to go. I think that's got the team to move up. We'll see. Right? Again, we've got non-farm tomorrow here in the United States. But that's playing out pretty good. I also wanted to
Benny, a quick question.
Sure.
Yeah, how do you play the B boundary to the 236?
To the 236?
Yeah. For example,
yeah, so that's a good question, right? So you're saying, hey, I just want to take it to that level. You can drop down, 5 minute, right? And use a confirmation like a trend line break, right? You can say, once I get this AB boundary to form, I'm gonna go, right? I know some people who just take it right off rip, right? So if you have a B boundary forming, that's a swing low. So what they'll do is they'll map it out and they'll just put their stop right below the B boundary. Okay. So, and then they'll just let it go. Right. So you might have that right below support because, like I said, to have a B boundary, you have to have a swing low, right?
Yes.
Right. Correct. So that's a form of support. So that would be right the equivalent of, hey, I'm just going to put my stop little ways below support, maybe measure it out. Right. If you're looking for a certain type of risk to reward to make the play, but that's how you can do it. Right. Because that is right here. This is a support level. That is a swing low. Right. So now I'm just looking for that U-turn. Right. So it's a tighter stop. If I get stopped out, it is what it is. Right. If you're using a tighter stop, you have to know there's you have that probability of getting stopped out quick. But that is for a lot of people. A lot of people like to trade like that. And that is A-OK. Right. Hey, I want to know a lot sooner or later whether or not, I'm in the right position. Because what happens if it stops you out and it heads down to the 127, right? Then you can look for it to form support and take another opportunity on that trade. But that's how I would do it, right? So especially if you're only trying to go to the 236, I might want to mark that target out, right? Mark that target out. You don't even have to take the whole fib. Like once you, let me give you an example. So this is the 15 here. We'll do it like on a 5. Okay. And we will, it's 382 target. Like, so if you don't want to drag the whole fib down, you just mark your level like that. Here, that's my 236, like that. Okay. This would be a small setup. You're looking at the USD, the dollar CAD, so not too much, right? That B boundary to 236, but put the 382 in there like that. You want to mark it down. So you would be looking at something like, hey, I'm looking for a trend line break. Or I'm putting it, this right here was a good setup because you had daily support there. So maybe I'm just going to go ahead. Once I get the low to form, I'm just going to go ahead and put my stop below that support level and then see if I can get the U-turn. Right. So you do it like that. Okay. You can do that with any level, that you're playing. You could take the same approach. Okay. Hey, I got to be boundary. Uh-oh. Hey, I've got to be boundary. That's a lower support. I'm going to look to enter a trade off that level. Yeah. Like so. Let me go back up to where we were real quick. So I didn't bring the fib down. Take this section. That was my initial low. All right, we got choppy. So right there. So this was your initial low there. I'm trying to work back before this price action took place. So this is where that initial B boundary was, right here in this zone, right? So that would have been your play. Okay. And then we just dance sideways. So if you would have entered off that break, it would have pulled back. But if my stop's below support, right, depending on your spread, right, and how far below support you put your stop. But I definitely would have put it below support because that's a daily level that already existed. And then you just let it run, right? And then you work your risk management out from there. So that's how I would play it. Right? That makes sense?
Yes, thanks.
You're welcome. So you can do that on any type of setup. It comes down, right? Like we always say to your trade psychology, right? So like here, if you would have entered there, right, you just got stopped out. It's like you just have to be okay with it. And you can win that way, right? You can gain an edge that way. Right? But you have to be willing. Like here's a position here, which is stop right below that B boundary where that would have been a winning trade for you. Right here and here. Okay. So yeah. It all comes down to you as a trader. But that's a very effective method. Right. And if it stops you out, hey, I'll look to catch it at the next level. Take it from there. Any questions on that? No. All righty. All righty. So I got that UCAT out the way. I wanted to go back, right? And take a look at that NZD Swissy. Now, this trade has taken forever, but it just shows you like how, hey, if I'm using proper risk management and I'm not tying myself up in a trade because I'm over leveraged, you can kind of just let the market do its thing, right? So we finally got that break. See here, right? I don't know. It had to be at least right over a week or whatnot. But you can see how it finally broke support, broke out of that range to the downside, which is what we wanted. And now it's making steady progress. So hopefully we come in soon at this next level of support at 56.19, and then we just continue on the way down. So that's just a quick check back on that NZD Swissy. That's just swing trading, everybody. That's just swing trading. Like we don't build an expectation like it's gonna go 255 pips tomorrow, or 3 days or 4 days. It's gonna get there when it gets there. Okay, so that's just a quick update on that NZD Swissy. So we'll see if it'll eventually work its way down for that 255 pips. It does, but you know what? It does require a lot of patience, but it's like, I don't know, like when you trade small and you look to accumulate positions, like if it worked this way back to support to this what's now acting as resistance, this 56.86 level, and it gives you some confirmation that it's just going to continue down, that might be where you add a position, being that it's broken a key support level and it may retest that, right? So that's where you can maybe add a position and you just accumulate, and it's just like I used to have a short fuse when I was just in too high, Now it's just like, it is what it is. It only represents a small percentage of my account, So if it doesn't hit that D, hit the stop loss, it's gonna hit that D. That's how I look at it. So it's just something that you just work on over time, with your mindset. But it does require a lot of patience. But that's moving on down the road. All right, finally, broke support. So that's the NZD Swissy. I wanted to go back because we were talking about this Aussie NZD last night. And we were talking about it coming back into that level. Past support becomes future resistance. That's exactly what it did. Okay. So now, right, we operate with patience and see, right, we get that signal, that bear signal is rejected now. It's starting to reject already. That was a quick one. That one moved pretty quick. So that's already starting to stall out a little bit in that area. So that could be a potential short play, right? And a continuation to the downside, right? For folks that may be interested in that opportunity if you trade this pair. See? So see how it closes. See if we get back below. Let me take this box off. This off. And so you can say, hey, if you're not in on it just off the location, right? You could say, this is a zone, right? This is a 4-hour level in purple. And then we've got this 106.71 level. So you may say, my confirmation is if I get a trend line break and I get a bearish close below 106.71, I'm going to take it, right? If you're not in it already, just based off the fact that we're in that 61.8 zone. Okay. So, and then having confidence in your bias, right? So if you've been short all along, then you're just rolling your stops. If this is going to be your initial entry, then you may say, you know what, my stop has to be above this A, right? I'm not going to put it all the way up there above the capital fit, right? Put it above that A boundary. And then I look at my risk to reward. If I'm just playing this sub fit, then I would be here. If I'm looking, hey, well, the overall is right here, right? So somewhere in the zone, I may look to exit this position if I'm just playing this 1-hour fit. Now, on the daily, you can see where we already came in at that Fibonacci level, that extension level. So the play is, hey, can we get this to turn over and come down to this zone? Right? We'll see. We'll see. So just based off this stuff, right? If you get there, that's 120. My stop is like, call it 40. Okay. So want to keep an eye on. Want to keep an eye on. Any questions on that Aussie NZD? But that was nice how it came right back up to retest that level.
Oh,
Right. One or two. Oh, let's take a quick look at so one person said that they took it, but this Euro Aussie that we were going back and forth on last night moved in a hurry out of that zone, right? I can eliminate these now. That was from the counter play. That was from the 80-20. But man, right? That one moved. Now we got a little cup and handle situation going on here a little bit, right? So we got this little cup, right? And we could be forming this handle. Sorry about my third grade scribble, everybody. Not that talented when it comes to art. But this little cup and handle. So, right, ideally we're looking for a correction, right? And then to move back down. So potential, right, continuation, breakout. Right. So we'll see how much that wants to test. Maybe retest that 4-hour level and holds and then continues. But man, that took off. That took off after our discussion last night. So that was get this out of here. That was, what was that, off that 61.8 level when it made that swing. Top end, so like 100, almost 160 pips out of the zone. 15-minute chart that Euro Aussie can move. All right. So if we come and take a look at the higher time frames, looks like here on this daily, right, that we're gonna get that push to that 80-20 zone, right? We don't have a 382 yet. But you can see how, right? You look at price action and structure, you can see why I got the bounce, right? So if I take this fib out, okay, just take it down to the bare bones, you can see where, look, boom, just held and continued, right? Moving right on up, okay? So that's where we are, right? I actually need to move just a tad, okay? So we'll see. We'll see what happens there, what type of reaction we get. That's a monthly level of 164.31, and we're in the zone. So yeah, but if once we move up to that monthly level, we'd be right at that extension on the 15th. So that's that on the Euro Aussie. It's been a good week with the price action. I want to take a look at tonight. Yeah. Just to review some of the longer swings. So take a look at this Aussie. And it's just long, right? We're about to come into a D extension. Look at that swing. Right. That's just very shallow. Bulls in control, right? Weaker Aussie. Right? We didn't get really any type of, right? It came right into, right? This was a good zone. Not my ideal location for, right? I like it deeper, but for your daily chart, right? That came right into, right? A nice demand zone there. That took off. Right. So we expect that to head to the D. You can see look at how clean the price action is on it. As resistance becoming future support. Okay. So as we move down through the time frames, you can see where it's just been, the momentum has just been on the side of the bulls. Okay. So we look for that one to finish out. All right. Stand above trend line. Right. If you're a cloud user, right, it gave us a little bit of everything on this move. Okay. See, look. Boom. That break, right? So if you like using that cloud and you have your directional bias and you get that cloud break, look at that move off the cloud. That's beautiful. And it's just running, right? It's just running. Okay. Any questions on the pound Aussie? It's a nice strong move.
No.
Benny, on the
Right.
Forex, do you have a trend line break there or no?
No. You're talking about this on this trend line right here?
No, the one closer to the 4 hour.
Or where are you looking for the trend line? You talking about one to the upside, counter trend line to the upside?
Yeah, to the upside.
To the upside. Let me draw them out. Hold on one second. Let me redraw them. In fact, let me just let me do this. There we go. Let's take those levels off right now. And I'll take that cloud off. We'll just come off the low. How about that? So you initially would have, yep, and then it broke back above it, right? But now, since this is, so you would have had a false break there, and then it just continued, right? So, but now this is my high, right? So this was the original high. Now I have a higher high, so I have to adjust that trend line.
Okay. Oh, cool. I just see the M there, so I know that I got those two little dojis kind of.
Yep. So it's getting up there pretty high. Eventually it's going to exhaust, right? And you can just see when we talk about with trend line speed and direction of the market, and we talk about momentum, right? You can see, right, how it just increased, right? So that's when you start getting, right, you're in the trend lines building, right, like that. Okay, like so. And I'm gonna move that to the outside of that consolidation right now because we're in the Asian session. So we'll just leave it. And then you can start dropping in your horizontal supports and resistance levels like that. So we know we've got one here. Okay. This one may close out and give us a lower high there. All right. So if you come in, you'll see, bang, it's giving it to us already. So like that. That's where we, and then your support. See? So there. That's just from your 4 hour. That's where we are. Like that. So that's the latest leg. So I could take it. I just wanted to focus on that leg, but I could run it right here just to show you guys how price tracks. Oops. Along these trend lines. See? Like that. That's on the low, right? We can take this one out. That's the lowest low. Just focusing in on that leg that just accelerated. But that's actually how you want to do it from that lowest low. Like that. Put you in the same position. Just want to have good fundamentals when it comes to drawing the trend lines. But that's how it's been moving. Right? That's what that looks like. So that's an aggressive inner trend line, right? You plan on your lower time frames and you want to, right, track a break, right, and take a position to the downside, right? Or you could be more conservative like that. Okay. So if you like those inner trend line breaks and those moves short, right, you can use that aggressive trend line, or you could say I'm bullish, right? So what I'm really looking for is this here, right? Maybe I don't want to, I'm not looking to take a short position, right? Play the correction. So I'm just going to leave these trend lines the way they are. And what I'm looking for is for price, kind of like we talked about some of those dollar pairs yesterday. I'm looking for price to come back down and then draw my trend line like this, right? Because I may be looking for that trend to continue long. And so then I'm just looking for a bounce. Like that. Okay. Everybody see that? Different ways you can play that? All right.
Yeah.
Back in my day, I used to, okay, cool. Because back in the day, I used to love to go down to the lower time frame, right? That aggressive inner trend line where you could do some damage, right? If you're day trading, you go down to your 15 or your 5, you draw this aggressive trend line on the lower time frames, and it's like, bang, I got the break. Short back down to support, I'm out, right? But if I'm playing a trend and I think I've got more upside to it, then I'm going to use this trend line here because I'm not looking for a tight aggressive break, because when you play that, right, then you're putting your stop right above the high and like, I just want to play that correction. But if you're looking to continue with the trend, you're like, hey, as a matter of fact, if we go to, here is this daily de-extension target right here, right? So if that's my daily 1.618 de-extension, then I'm saying, look, I want to see this finish playing out, right? And if I get that break and I move back down to retest this trend line and it holds, then I've got my counter trend line here. And then I'll buy to that daily 1.618 target. Right? So that's how you can kind of use trend lines and things like that. Because we say, hey, direction, speed and momentum of the market and potential entries, right? So this is an example where you can use a trend line, right, that price wants to respect to get an entry. So on a move that you might have missed out on that's been running for a while, like, okay, well, how do I get involved in that move, right? Well, sometimes the market will give you opportunities to where you can. So you just have to be patient and wait on it, okay? So that's that. All right. So that's been a fun one to watch, is the pound Aussie. Okay. So sometimes it takes, right? It takes time for you to just see, you know, so the scenarios play out so many times, and then you kind of figure out, okay, this is how I want to, when I see it, this is how I want to play it. Right. And so you just have to spend your time on the chart. So if we don't get that push up to that daily 1.618 from where it is now, if it respects these 4-hour resistance levels, then we look for that correction back down to the trend line and say, hey, I'll take it there for the higher percentage play. All right. So that is the pound Aussie. Another one, right? You can look at how these swings play out. And the reason why I like going over these is because when it's down at those lower levels, and this is what was so hard for me as a trader. It's like, okay, this is a daily chart. I'm at a 61.8 level. Okay. It's hard to see into the future because there's no guarantees, right? Right. So it's probability. Right? So that's why you have your sweet spot zones that you like to trade, and you stick to those and you become consistent over time. And it's all about how your edge plays out. Okay. So you can see here 61.8 weekly support, nice bearish candlestick. We got a trend line break and it's running, right? So think about that. If this runs, right, from this 61.8 to your stop, right, it takes time, right? Okay. So this is a big boy move. So if we get that D extension eventually, look at that. And the reason why I show you this is because it doesn't matter the time frame, the market moves in waves. Okay. And sweet spots are sweet spots, no matter what the time frame is. Right? It just depends on how much within this leg, the C to D push, do you want to play? How much do you want to be in and out of the trade, in and out of trades as it travels from that C to that D, right? If you like being in and out of positions, then you're going to drop to the lower time frames, and you're going to play the smaller A, B, C, D waves. Right? That's what you're going to do, right? But this move, okay, there, 733. It's over 2,300 pips to the upside. Okay. And so what's amazing about this market, and Ryan had brought it up last night, is about fractals, right? The lower time frames are just smaller, identical replica of the lower time frames, of the higher time frames. Right. So we see this swing that's happening, that's playing out. And this is what we call, right, our C to D push zone. Get my computer to act right tonight. Like that. So you can see on your lower time frames, right, how that's playing out. And that's what we mean by the higher time frames control the lower time frames. Right? See? So it looks messy, right, as it's traveling. I don't know why I have to bring that. So the lower the time frame, we get choppier and choppier. The waves get smaller and smaller, but it's still moving in that same direction. See? So that's why I always say, hey, just a little bit of spatial intelligence, right? That's all, because what we look for is if this is going to continue. We can see here that we have a new AB boundary on the 1 hour. So we know, right? We look for it to drop into our buy zone, whether it goes to the 118, 127 zone and works its way down, or whether it does it right now. The idea is, from what we see from the higher time frame, our directional bias is long. So it may move in consolidation like it did here, right? And a lot of times this is where we kind of get lost in the price action. But at the end of the day, right, I hope you all can see that it's moving along its path to the upside, right? That C to D push zone. Everybody follow me on that? Drop me a 2 in the chat. Okay, awesome. Okay. And so over time, after seeing it play out, you start to build more and more and more and more confidence, right? Saying, you know what? I need this to go to the target. That's and some of it, that's swing trading, right? Some people may not be into that, you know, that's cool. Right. Then you just play your smaller ABCD waves on your 15. You may go down to your 15-minute chart. And let me put this in here. This, let me go down to your 15. Okay. Add that in there. And you say, hey, this is a clean setup to where we say, when you're swing trading, we like to use that monthly and weekly to try to determine our directional bias. Okay, is bullish. And then we like to find, right, when we're doing that traditional swing, right, strategy, we like to use our daily to define our low price. And then we like to enter on our 4 hour, 1 hour, or our 15, or whatever it is that you desire as a trader, right? So if I take this and I link this down, hey, if my trade plan says that when I talk about the Fibonacci sequence, my 61.8 or lower is my low price, then we came into our low price. So now it's just a matter of what time frame do I want to enter? Some people like the 4, some people like the 1, some people like the 15. But when I come into that low price, like we see on a daily, then I am then gonna go to, right, whatever time frame I like to enter on. right? So it's right here in this zone. Okay. So this, right, going back in time a little bit. But you may say, I am going to play fibs on the 15. That's the chart I like to trade on. I found my low price on the daily. I'm looking for a U-turn. Well, if I'm looking for the U-turn, I need a trend line break on my preferred time frame to enter. Well, I got it. So now I'm looking to trade. You can say, you know what? My directional bias is long. This is my target, my daily fib. So I'm looking for any and all opportunities to trade long if price comes into my sweet spot on my fib for however many pips to the upside, right? 2,000 pips or something. So I'm trading ABCDs. I'm going to win some. I'm going to lose some, right? And I'm looking to trade them, right? If you're trading with the trend, I'm looking to trade them long. So you can see you're going to win some, you're going to lose some. But ultimately, I'm looking to trade. I'm looking for bullish opportunities, right? All the way up. You can see how choppy that was. So some you won, some you lost. But I'm looking to trade long. Okay. I'm looking to trade. Look at that one. Okay. This one took you out. Okay. You can flip your fibs, or you're saying, hey, I just look for the next low in the trend line break. Okay. If you want to do it that way, okay. Or you just say, hey, I'm long, I'm looking for lows. Okay. All the way through. Some you're gonna win, some you're gonna lose. Okay. If you plan on your lower time. Okay. Finding my lows. Okay. Just moving along. Right. Do you have 80/20s and everything like that in there? Absolutely. We know that. How to play that. Okay. But you can see, okay, here we are. Okay. So look, that's the little trick that we teach, right? How to play that swing back to the upside, get in another position. But you can run it off the low. Okay. And that's where we are. Real time. Now, where's that target? Way up there. Okay. So if my bias is long, pound New Zealand, and I'm playing it off the 15, then my next opportunity, okay, is here. Good price to come into my zone. This might be my next long play. Like so. Okay. Okay. So many different ways you can play it. So now I'm just trading up to this level. But I may not want to hold it that long. I might just want to be in and out on my ABCD waves. Okay. Or whenever you get a favorable fib, you may add to the position. Because if you got long, right, if my initial entry was long and I carried that all the way through, I'm still in profit. Right. Hope you guys catch that little nugget. Right. And then you're looking to add to your position if you're holding this swing. If not, this, right, could be potentially my next setup. Price comes down, hits my zone. Boom. Yeah. Yeah. Now, 80 pips, 248. It's a pound pair. Right? So you know what? I've missed this entire play so far. This is going to be my initial entry to get long. Like this. And then guess what? When this D extension gets hit, like so, D extension gets hit, guess what's going to happen? We're going to eventually form a new fib. And then every time I get an opportunity to add to the position, I'm going to add to the position. Right. Like so. I can eventually move my stop into profit. Right. Yeah. The extension hit. Now, maybe every fib doesn't give you an opportunity. Maybe this one says, you know what? Nope, we're not giving you that deep retracement that you like. Right. So, hey, I didn't get a chance to add there. Right. But guess what? I can move my stop. Right. Right. All the pips below that stop belong to me. Right. So then I could just work this. Right. So now in shallow retracement, got to do fib. Maybe this gives me an opportunity to add to the position. Okay. Small. Right. And then I'm running. And I'm working my way up to that daily 1.618. Okay. And all right, let me grab it. There it is. Then I'm adjusting my stop. Okay. And you play this game until it runs out. So that's another way to look at it. Multiple ways to skin a cat. Okay. Any questions on that? That's why we say, hey, you could just dip your toes in the water. Once things get going in your direction, you can add to the position. That's how we do it, right? That's just a systematic way of doing it, using the fibs. Cool. Thank you. Appreciate the feedback on that, right? So that's ultimately the target. So I'm looking to trade up. So whether you get in and out or you look to add to the position, however, right, you want to do it. So if you think about it, if you go back to where you initially entered this position, right? If I initially entered this position somewhere in here, even though some of these smaller fibs got taken out, you're still in profit because my initial entry was way back here, right? So all the ebbs and flows or whatnot that's happening, right? I'm still moving along, you see? Right? Right. Okay. And that's how you can build your position. So it might be one micro at a time, you know, one micro at a time. Who cares? It's your journey. You're trying to build good habits, trading habits, a good discipline, right? But you give yourself 3 years, 5 years, right? And see what happens with that compound. See what happens when you build that confidence on those swings, right? So, right, that one's moving, okay? And you can see just from the weekly, right? Look at it, right? That, I mean, it just respected the level. And as this level came in, it gave good confirmation with the key fib level. See? That's all. And it's just taking a ride, right? Our daily stochastic is back in the buy zone. And it's just running. So fibs are pretty powerful, right? Once you build the confidence in it. All right. Last one I'll take a look at is this UJ, because I know we've been following this one. That was playing in our favor in regards to the direction that we were thinking. And you can see, right, how we drew it up last night. You just give it time, right? We said, hey, it's probably gonna pull back, and you see it's pulling back. Right. So we've got 50% there. Right, so it may be ready to turn back over and move to the downside. That one, right? That one's one to watch out for with the jobs numbers. Right, it's a dollar cross. So this one should be interesting. Right, those numbers come through pretty bad, right? You might just see it push to the downside, right? Accelerate to the downside faster. But we'll see what happens on that. Any questions about anything we covered or anything in general tonight? I thought this would be good to go over some of the
Benny,
swings.
Benny, just to recap on something you said earlier. You said we use the monthly and the weekly for our directional bias and the daily for something that I didn't hear properly.
To try to look for your low price. So traditionally, the way we were taught with the FIDs, right, is you do your top-down analysis, right? You try to, the best you can, we like to look at the monthly and the weekly to try to say, what's our directional bias? Like on this UJ is down, right? It's moving down. So we could say, hey, based on this reaction off of 137, right? We have a bearish bias on the dollar combined with some of the fundamentals, right? Our bias is bearish. So now we say, okay, well, we want to come and say, well, our daily, where's our high price, right? So if we're using the FID, where is our particular high price for this given point in time? Well, you got a reaction here and we spotted a crown, right? So this is how we knew to say, okay, well, this is my high price based on this pattern. Okay. So it's not ideally way up in the zone. The pattern kind of overrode that, right? We say, hey, we've got a left tip. This is the zone for the right tip. And we've got weekly resistance. So this, right, represented our potential high price. So we say that, right, and we stay steadfast in that. Then it's just a matter of, so when, let me link this down. So we'll take the circle down and we see this sitting here at our perceived high price. So then what we're doing is we're going down to the 1 hour, 4 hour, your chart of choice. And we're going to look to enter, right? So let me clear this like this, bang, and I'll clear this off. Like this. So you see that level, right? So now what I'm doing is I'm like, all right, well, I look to enter off of a trend line break. So let me squeeze this out. We can say, okay, pull this out for now. That's that fib we brought down. Look at that. There's that low. Okay. Boom. Boom. 1, 2, straight through. Where's the second touch? Right there. Okay. 1, 2, straight through. That would have been right here because this price action here didn't exist yet. We're looking for the U-turn. Right. So there. Okay. You drop down to your lower time frame and get more aggressive with that if you want, right? With a more aggressive trend line. You can run a trend line. This was the high point. You can drop down to your lower time frame and run that trend line up through this high point here. But let's just be conservative and say, well, here's my break. You see that? Because from my day, I established my directional bias. I found my high price on my daily chart, area where price could reject, and then we move down. See?
Yes.
right? So when you're swinging, like it requires, so if, for example, if we go back to this pound New Zealand, so this is, and I had to build this, like this type of patience early on, because this is, right, oh yeah, definitely done that. So this is where it gets crazy, right? So where we had to be very patient as traders, as swing traders, right? When it was being taught, is that if, okay, let me clear this out. Just gonna clear it. Time to remark it. So if I say my bias, right, is bullish, I formulate that. Then you say I need a low price, and I'm tracking my fibs throughout. This one's crazy all over the place, but coming down through the time frames I established, this is why I run the fibs. If your bias is bullish, okay, and you say, you know what, I have a bullish bias because this pound NCD, for whatever your reason was at the time, okay, then you're gonna wait, right? You're not playing with any of this. So I've got an up AB fib. So just imagine it, right? Nothing to the right exists, right? I've got an up AB fib. If I'm bullish on this, I'm letting this go because I want my low price. You guys follow me on that? Yes, no?
Yes.
Right? Because, and that's why we were taught to, hey, we look at all the pairs because you're going to be waiting, right? But while you're waiting, there's always another pair, right? Because of the way the fundamentals work, right? Something's setting up in your zone. So while you're waiting on this to come to your zone, right? And you can say, I got a new AB boundary. And here, I'm just gonna put a chart alarm on this bad boy right here around my 61.8 level. And when that chart alarm hits, a month from now, 3 weeks from now, whatever it is, I now know, hey, I'm gonna look to get long because that's coming into my low price, that I want to see. And then I'm gonna go to my lower time frames and start looking for U-turns. And I'm gonna start looking for up ABCD opportunities, right? So what you're gonna look for on your lower time frame, right, is one of these. So you're either gonna be aggressive off the trend line break, right? Hey, it forms a low in the zone and then I'm jumping in, right? So something like this. Right. Price is coming down, down. Say this is like my 15-minute, 1 hour chart or whatever, a 4 hour, okay, right? So what I'm looking for, right? Now this right here represents all of this, right? I come into my low price. So what I'm gonna do is I'm gonna go down to my 1 hour or my 4 or whatever time frame, and I'm looking for this. Bang. Right? Some people, they're aggressive off the trend line break. Hey, if I get a swing low, I get a bullish candle that closes and breaks, I'm in. Some people say, oh no. Hey, now watch this. Because I found my low price on the daily, my perceived low price, right? May not be, may eventually correct and push lower. That's just trading. But you say, nope. Right? Look, A, B, C, D, A, B, C, potential D, reversal. Right? No, I want to see price reverse on my lower time frame, right? And come back and pull back. Okay. Yeah. Yeah. Then I'll get long. Yeah. So, because I found my low price. So that's where I'm looking for those classic reversal patterns to start to occur on my lower time frame. See? But this was my low price. And then there's times where you may be wrong, right? Where it wants to push deeper into the buy zone, right? We see that happen all the time. Right? So I'm keeping my eye on it. I'm watching, okay, where's it going to find support next? Because then I'm looking for the same scenario to happen. I'm looking for the reversal to occur. That's how you play it. So then that's how you get that initial entry on your lower time frames. But it's like, hey, if the Fibonacci sequence plays out, then that means that if I get that entry on a lower time frame, based on my low price from the daily, I have over 2,000 pips of buy potential over the long term. Okay. Okay. That's the thought process. Okay. That's it. Right. And you may never right want to ride a trade out like that or anything like that. It's just our main thing, our main focus is giving that strong foundation in regards to top-down analysis, understanding how the Fibonacci sequence works and how it plays in there, so that you can get your direction right. Because most traders have a hard time getting the direction right. If you can't get the direction right, you're in trouble. Right? It's hard to become consistent like as a swing trader. So, but you may, hey, I just want to play ABCDs on the 15 minutes. And that's cool, as long as you have the direction right. There's nothing wrong with that. You don't have to, you can make plenty of money without, right, holding a position, right, for that long. You don't have to do that. Right? We're just giving you the overall structure and the framework. I mean, we just looked at the position here on the 15-minute that if that worked out, you're looking at right, over 200 pip move on a 15-minute chart. That's a good day at the office. That's a good week, 2 weeks for a lot of people, maybe even a month. Right? Like here, you don't have to be, you make a killing if you can consistently find setups that's giving you, what is this last fib here? You took it off the 61.8 to the D extension. That's a 165 pip move. Find enough of those, you do all right. You can find a quarter of that consistent, do all right. All right, the key is consistency over time. All right. Any other questions?
Yeah, so just a quick one. So in determining the direction, do you think it's possible to use a 200 SMA to determine that?
Yeah, you could do like, right. So, right, we come to this setup here. Let's clear this out again. And right. So we could put that there. And say, you know what? I want to apply my 50 and my 200. See, you bought it 200. Absolutely, you can. Right? It's kind of like that additional confirmation. So say you, hey, my directional bias is bullish. Price is pulled back in my zone. Well, I like to use the 200 SMA for confirmation. Here's my confirmation right here, right? I'm back above, right? Now I've got that good golden cross with that 50 crossing over that 200. And now I'm looking to stay bullish. I'm above the 200. I've got the gold cross action going on with the 50 crossing over. And I'm good. Right? It's just like a cloud break, right? So I'm not, hey, thanks for the alert at the 61.8. But I'm not ready to make a move on this long until I get further evidence. And part of that evidence is a break above the 50. I mean, the 200. That's a great trade plan to have.
Thank you.
You're welcome. Any other questions? I had coffee after 6 o'clock today, so. So if you got a question, better ask it. Indeed. So that's moving up, right? So that could be your method there, right? If we close these out and we say, oops, sorry, I got my drawing tool locked in. You could say the same thing, right? If you put your cloud on. Boom. That's a beautiful game. Hey, look, I mean, some powerful stuff. Right? That's why there's a lot of indicators out there, but we only teach a few, right? And we teach the cloud, right? I have a 5200 template that's very powerful, especially long term on those long term charts. So you may say on your 15 that clear this out. Like this here. Okay. Think about this. Okay. This is where this sits now. My bias is bullish. I usually say I'm not worried about an 80-20. Okay, that's cool. Well, I want to get long. Well, I have the cloud on. That means that I need this. Follow me now. I need this to come. I already know because of deep correction, it's going to always put me back below the cloud. But I need this to come down. And then at that point in time, right, I'm going to need, right, some little cloud thing to be set up. Okay. And then I'm going to need it to break back above the cloud before I take the position. Yep, I can, right? So, right, and we know that we need to, right, have a bullish cloud signal up ahead and all of that stuff comes into play. Okay. But, and now when that happens, then it's almost like, think about the concept, right? The concepts that we teach, stop below the A or below the C. Well, if I wait for price to break above the cloud, then I'm going to put the stop below the cloud, below the C. And I'm going to try to catch the bulk of that move, that C to D move. That's what the process, right? We live with results. I like that. Hey, I'm trend trading. This is what I need to see happen. Right? If you come back to, but first let me do this. Right? So if we Go to the settings. You want to take a screenshot? Let me know when you got it for the stochastic RSI.
Got it.
Got it? All right. You got some more coming in, so.
Got it.
Yep. There's that last little part.
Thank you.
All right. So if you look at something like that that play last night, right? You could have said that we were going back and forth on that. It took off on that Euro Aussie. Okay. So we come into this move. Look at the swing. You might say, hey, right? I need that to go back above my cloud. See that? That's textbook. Boom. See what I mean? Like that. Or, right, you may look at it from, right, the other perspective, which you're moving averages. Some people have their own little moving average strategies depending on the time frames of what they choose to use. But even there, right, that never even got back below the 200, right? We broke the 200 right here, Jim. Combine a couple things with the fizz, man. Do some damage. Right. So a lot of these confirmations have really helped you with your patience, right? I love the what was another one that I had? Canada, let's see it. Euro NZD, one of them, I can't remember, but one of them set up, and the break was really nice. It's been quite some time now. It might have been. Let me see.
GN, maybe a GN, I think. I don't know.
Yeah, I think it was the GN. It was the GN. It was this one at some point too, though. Right here. This is what it was. So it's hard to see now because the new fib is on it. But when that took off and it broke back above the cloud, it was a good entry there. But you might have your rules. You can still play. Maybe it wasn't this one, but you can still play your rules and say, I want a correction. Say you're on your 4-hour chart. 4-hour chart with the cloud is really good. Really, really good. So but you might say, hey, let me put this one on. See. I still want those same rules. I still want price to drop to that 61.8 for that deep correction. And then I want to see price reverse, but I don't want to take that trade until price gets back above the cloud. Right? So, for example, here, this one's come back and it double bottomed. Right? So naturally, and this one here, because it's kind of ranging and consolidating, right? Not the cleanest one to look at, but if this double bottom holds at this 61.8, you may say, I'm not in here. Even though I see that double bottom, I just want to see price break back above, right? The cloud. If I get a good bullish signal, right, I get a Kumo twist up ahead and it's bullish and we break, then I'm back long at that point, right? So, hey, maybe this initial move, right, didn't necessarily work out because, hey, price is going to do what it wants to do. We have price action patterns, potential double bottoming. But okay, I'm out of that one potentially. But now I'll just wait. If we get it back to break back above, hey man, my double bottom looks like it's confirming. I'm going to get back long again. Right. So you can play the game that way too. All right. So great session, everybody. Lots of good questions, right? If you have questions, right, make sure you ask them during these sessions. If you don't want to take your microphone off mute, that's okay. Just put it in the chat. Or if you think about something later, put it in the Discord. This is just a range of things, really. You think about it, but
And
yeah.
Before
Yes.
you leave, can you show your 50 and 200? Is it two different EMA in one, or on
Oh
your?
no, I just when I do, so I'll clear this off. I just set up templates, take that out. So it's just simple, not an exponential or anything. It's just a 50 to 200 simple, like that. That's all. And this clearly tells you, right? And that's why that's another moving averages are good. Because you can see it with the cloud too, when price action is just moving sideways through the clouds, but you can really see it here, right? That's really that's ranging, right? But that's just going to your here to your indicators, and then you're just gonna add them. And then once you add it, you just save the template. Right. So that's why it's called 50 to 200. But
Gotcha. Thank you.
yep, you're welcome. Right. So just two simple moving averages on there.
Benny, just a quick one.
Yep.
Does this SMA apply to all the time frames? Can you apply that from?
Yeah, I've always, now it's a slower move, like it's almost like the cloud, right? Where I love to use the 50 and the 200 on the higher time frames monthly, because that really gives you a gauge of where price is, right? So, and I know a lot of your players and institutions that they really look at that from the higher time frame. Your 200, right? Your 50 and your 200, your gold cross and your def cross, right? So that's a clean def cross there, right? That 50 cross down through the 200. We've got it angling to the downside too, right? But we know that, right? So you guys that's been with us for a while, we played that one, right, to the downside. This was your crown, so that made sense, right? That was your crown reversal pattern that played out, right, to perfection, right here. That was a long time ago. Right. So that made sense. But you see like how that crossed down, right, and just went tested the 200, stayed below it, right at that right tip, and then it just collapsed, right, to the downside. Okay. So higher time frames are definitely good for the 50 and the 200. I don't have too many like lower time frame moving average combination strategies or anything like that. That's something that you could work to discover, but I've always found a 50 and a 200 works. It's conservative, right? That 50, because that's not a fast moving average, right? So it's not like how some people may play like a 50 and a 9 or a 8 and a 13. I've seen all types of moving average, combinations. You just have to back test it to see what you think works in regards to confirmation on the lower time frames. But higher time frame, definitely 50 and a 200 is a good one. It's a good combination. So that's the best I can answer that question.
Yeah, thank you.
You're welcome. All right. It's been a great session, everybody. Hey, that's the end of the sessions for the week. We will see everybody, right? Saturday morning, 7 a.m. Eastern Standard Time for the Forex Weekly Ritual. Don't forget, we got non-farm payroll tomorrow. Should be interesting because it is Good Friday. So I wonder who's all taking off, what type of liquidity we're going to have on that Friday. It's going to be interesting. So if you get a chance, right, during your busy Friday, make sure you take a look at the charts or take a look at Bloomberg or the news to see what happened. We'll make sure we get some things posted in the Discord. Good night, everybody.
This was a fantastic session. Thank you.
Hey, thank you so much. We appreciate the feedback. Have a good night.